Hey everybody. So just we can do a Monday end of day review on what transpired today. Um, we're going to run through a litany of stocks that were the most active and just go through them as where they became actionable points. And also we're going to go through the indexes a little bit at the end of this on the NASDAQ and kind of show why the NASDAQ should lead here, and you should see the financials and energies come in. And we'll get to that. I'll get to that at the end. As always, the information here is timely, and I recommend that you subscribe to the channel and simply click the notification so that you get it in a timely fashion. So let's jump right into this. This is one that we actually put in the newsletter today. We put 4 in the newsletter today, which is rare for me. I don't like to go over 3, but there's just so many stocks that are classically breaking out right now that when this happens, you have to bet them. There's just so much probability that these are going to work. It's silly. So this was a pretty clear indication of, and I'm going to walk through why I bought them. But this was a pretty clear indication of a rip, right? And you can see this volume, how it came in. And then we picked this price because I want to be 10 cents over this line. We gap below it, and then we break out. Okay. Now let's drill down. You can see these support lines. This is a 15-minute chart. So you can see this 15 minutes and what transpires. You come down and you retrace. Okay. So let's go a little deeper. Let's do a 5-minute chart. You can see we open, we come down, and we retrace right to the low, and then we go. So this gave you 2 opportunities to get in it, and you can even drill down into the minute chart if you wanted to, and really see it. Here you are, and you can even see the reversal. Let's get rid of these indicators, and here's your reversal. So let's say that this came out and you're at $12 or $12.50 or what was that? Yeah, $12.80 when by the time you read the newsletter or it comes out. You don't chase these. Just see if they give you another opportunity to get in. And this one definitely did. Right near the low. And then you have your little reversal bar here, and then we popped over it, and then you go. And this is a simple 1-minute chart price. Now, if you overlay the indicators in it, okay, you can see all these volume spikes, right? So you knew that the volume was coming in. And that gave you another indication that you wanted to be in it. So that was the trigger behind it. What do I think is going on here? I think that this, and people that have been following me for a while, I think you have I don't know why this is GME there. It's weird. What's right here? You have this. This actually should come down a little bit. Right now you have this upper trend line. Okay, you can actually probably draw it back to here or here. You have to flip this now. I mean, the next thing you do, if you have to break out of the channel. If you don't break out of the channel, you'll simply roll back down below this line. And at this point, the stop would probably be a close below the 1110. We'll probably move it up. I would like to have seen it break through today. It didn't do that. Would I add it here? No, I wouldn't. We're in at a decent price, up about 10% on it. But for those that are asking if they should add to it, now's not the time. KMPH. So this is a pretty interesting one. I like this huge base. It's interesting. It broke down, and that was the low, right? So that clearly shows that there's support and there's people that want to buy this. And then we just traded up. We had a great day for some reason. I don't follow the fundamentals of the company, and we kept pushing and pushing and testing this 200 day. But this is really important about this. You never closed below the 200 day. You just kept hitting it. So that means, again, and for people that don't know, the 200-day moving average is your last bastion for the bulls, meaning when that's broken, you don't want to be a buyer. This is where institutions really get in and start trying to defend certain lines. So you break out, you pop above it, and you have a solid close. And if you go through this, and we'll just use a quick 15-minute chart, you can see the volume. I mean, this is substantive volume for the stock. This is not small volume, and it drove the stock higher. So there's somebody that wants to own it, and there's something going on here. What that something is, I'm not sure. Now, there's a ton of problems, but at this price, 12.20, before I even get up to here, I don't see an issue. And this is going to be another issue here, this 14.80, but at least that gets me in the stock for a 20% move while I see what it can do. So if I was interested or inclined in playing this, you have to play the 11.95 level, which is right here. And then if you close below this, support and resistance would flip, and then you really don't want to be in it. This is one that, if the market was in better shape, we would have put it in the newsletter, but I held off on it just because it's been so speculative with the short positions and everything else. But people have been short this for a while, but here's that break. This is when we talked about it on Twitter. And then you could just see from there it just kept ripping. And I don't see any reason. This is a solid close. This is the, second highest close the stock's ever had? Yet this is the second highest close the stock's had since this. We have not closed here since this. So this is pretty substantial. And the gap where you don't even backfill, and it's the low of the day, clearly shows that people are covering. So I wouldn't be surprised to see this go more. Now this resistance line right here, we have to go back a little further. We have to go back to the weeklies. And then you'll see where these lines are coming in at. Here's like 13.20, that one we broke. But this $17 line, that's where you're going to next. That should really be your target, and then seeing how it acts around there. AMRS. I mean, this looks like a pretty classic breakout. Let's see what's going on here. So the first thing that sticks out is this, right? Well, I would just go here. It's cleaner. And there's another one right here. You might be able to see. So, and you can see how it battled here. Couldn't really close above it. Finally closed above it and flipped it. So let's look at this one for a moment. And you always clone your lines. You always clone your lines. These lines, you clone them so you have the same trajectory. Let's get rid of this. So what you have here is a rising wedge of a trend line, and you broke out to the upside, and you closed it at an all-time high. That's pretty. This is a pretty significant move, and it's also a very easy place to find out where to put your stop. Your stop goes right underneath here, right? Your stop goes right underneath that bar. So let's just keep rocking and rolling, and let's throw in some more bells and whistles. So you have the moving averages that are respecting it. I don't see anything wrong here. I like this a lot. This looks like it could keep going. And we're going to look at volume in a minute. I just want to see something. Yep. So not only are these all turning up, I have a 50 and 200 week crossover, which is a major bullish sign. And we looked at this before, it looks like, and talked about how the volume was spiking. Yeah, we obviously did because we have a volume line here. Look at this volume that just came in. So this is going to move. I'm not sure of the space that they're in. Let's get rid of this one. I'm trying to keep these all uniform. So but breaking through this 18, I mean, you really don't have anything now until here. I mean, this could really go. So, I mean, you really don't have any real spikes or issues until this level. Now, it's not going to be a straight line, but this can still go. So this would definitely be one that you may want to put on your radar. And I don't know where this went, but let's put this back in here. So I do like it, though. And let me just see something here. Yeah. Okay. So let's rock and roll. Let's keep going to the next one. So ZIM. ZIM I like. I like the breakout here, and then we wanted confirmation, and we got it. You know, an up day, down day. Doesn't really matter. Made a higher high. Let's just see what happens. We're at a 24.25 with a $23 stop. I like it. I think it's going to go back into this channel and keep going. This is a really clean line with a ton of volume coming in. I don't see a reason to do a darn thing with it. So this stock has just consistently underperformed and just disappointed, right? I mean, every single time we thought it was going to get above this 23.5, and it rejected. And then that one day it finally does do it, only to give it all back. And then you can see, and we can get rid of these indicators for a minute, you can see how this 27.80 5 level, and this level's been there for a while, drawn for a while. You can see 1, 2, 3, 4, 5 times, and you can't get above it. So if you were so inclined to buy this, this is pretty clear. This is where the open was and the close was, right? So we've only ever had one higher close ever before back here on the stock. So really your bar that you'd have to look at if you want to be involved is 27.85. And you know, there are some interesting things going on here with the pattern. You have a nice little triangular pattern going here. Let's get rid of this for a minute. And we'll click here. See this little triangle? And this is why it's a triangle. Come on. There you go. So you can see how you're wedging in here, right? These usually don't just keep going straight. They're going to do one thing or another. And let's just get rid of the arrow. And we'll make this yellow. So, oh, it sticks out a little bit more. So what you're doing here is you're realizing that this may have some kind of impetus, right? Something might happen here. It's rare that they're going to go straight. It just doesn't happen that way. Let's throw in the indicator, see if we get any more clarity. You know, you are getting this little turn here. You broke here to the downside, but you are getting this little 8 and 5 turn right where the stock is. If this pushes up, it could lead to some upward pressure. I mean, if you truly want to be in it, you know, you could wait for this break of 26 3/4, but candidly, a 27.85 flip to $28 is really where you want to be involved, because when you get through that, you know, it could turn and run. But looking more at this and how tight this is getting, this you may want to watch this, and you might want to just set an alert. You know, it's real simple. I don't know how everyone has their systems, but you just set an alert, and then it's done. And then it'll go off. And I don't know how everyone uses their alerts, but mine just will go to my phone and my email, and they'll just keep, you know, beeping until I recognize them. So here's a planter, and this one I really like, but you know, we're just not getting the oomph that I keep waiting for. So you opened at the high and you're closing at the low. It's not great. You're flipping the 21, and the 5 and the 8 are crossing, and the 50 is just being respected. And this is what happens. These resistance and support lines flip. This one flipped. See how it flipped, right? We can't get above this. Let's get rid of all of them but this one so you can see what I'm talking about. See how you flip this line? Okay, so can't close above it, can't close above it, can't boom, boom, boom. It just told you we were going down. Whether or not you wanted to listen is another story, but it's telling you what's going to happen. And that's exactly what transpired. Now, we've broken this downward trend, but we're still not above this $30 range. So you still have a ways to go here. And I don't see a sense in doing anything until this thing confirms. But it's on the top 10 list that I did in video of top 10 stocks. And I would recommend that at the end of this video, I'll link it. I'd recommend, if you haven't ran it or looked at it yet, to look at it, because some of those stocks are up pretty significantly today. So, and I'll link that at the end. There's another one we threw in the newsletter. And before I forget, the newsletter is free. It comes out 3 times a week, and it's in your, it goes right to your inbox. It's an email. And we go over stocks, indexes. I give color commentary, buy alerts, and people are doing fairly well with it, and it's also instructive. So it tries to educate as to what you need to do to be consistent and profitable and repeatable. I mean, there are patterns and processes to this. So this is, not to divert too much, but this is what CCIV, and this is what I really liked about it today. And let me get rid of this so I can show, because I really want people to start understanding why I'm pulling the trigger. Because if I start explaining to you why I'm pulling the trigger, then you're going to start throwing ideas at me as to why you want to buy something. So this was a very simple move. And I actually drew this down to an hourly. This is a big name that people really want to be involved with. And this is CCIV. And if you go back here, you can see how we flipped this one level, filled the gap, and now we had to get above another, right? And that's exactly what we did. We have this little cup, about $8, right, on the hourly chart. and then we popped above it. Now, overlay that with this daily. Okay, and then throw these in, and you can see right at the 50-day, we have a 5-8 crossover. We're right at the 50-day, and it didn't break. It's the first day that we opened over it, and then on top of that, we break over here. So I had 4 or 5 different things that really triggered here, and then the other, just to drill down, and I know people will use like FinViz or whatever for volume. Look, to look at volume on a stock is really, really simple. You put a 30-point line in, so if you're on the daily, it's a 30-day line, and you just put it at the bottom. That way you don't have to click anywhere, go anywhere. I can tell off the open what's going to happen, right? Because look at this volume. This is saying that at this time during the day, on these first 15 minutes, we trade somewhere around 11,000 shares, okay? This morning, we traded 42,000 shares. I'm at 4-to-1 volume. I don't need another site to tell me that. I could just tell by here that I'm 4-to-1 on the average volume on the 15-minute chart over a 30 data point, right, range. That's all I need to know. And it's really don't complicate that when you're trying to figure out, your volume and everything else. And what that did was just give me one more piece of information. And it did exactly what we wanted it to do. And it got us in here. And now I think we're up $1 after hours. It keeps running after hours here for some reason. And, I think you have a clear shot to this 35 range, 34.50. And look, it's already starting to turn up. So it's probably going to flatten by the time we get up there. And then these averages should carry this up. Hopefully we can get back in this channel. But for now, we just put a $40 target on it, hoping that we get through this 21-day, which I think we will. And then we just get to the top of this and then see how we do. So I don't want to do those yet. We're going to do those at the end, the indexes. EXPI absolutely has just been, let's remove all ray annotations. I don't know where all this stuff is. Let's get rid of it all. Remove. Okay. So EXPI, this has just been an absolute monster, and hopefully you can see this trend. Okay. So let's get rid of these indicators for a moment. So there's your trend, right? There's the top of your upward trend. And as always, you clone them, right? And when you clone them, you just pop them in, and you can see how they kept that trajectory. So here was our range, and I guarantee that if we look at this and throw the indicators back in, right, you can see how it held here and how this moving average just happens to be at the top of it, right? So what you'll see is with these longer term trends, usually a moving average will be right near it too. So what we did today, and why this is interesting, we flipped out of this channel. I'm going to leave these yellow for now. Okay, sitting right here. You're basically looking to flip over. Flip over this, and that gets you away from the 50-day and gets you to push, right? And gets you right up here. So flipping this as well, and then you could see us really move here and continue higher back to this level. They had excellent, they just had excellent earnings. They're growing very, very fast. So people are, everybody tries to buy these stocks when you have earnings growth like this, and they'll continue to until it comes in. But this move, almost parabolic, right? You break out of this trend, and we talk about this all the time. You break out of these trends, and then when you break out of them, the stocks will move parabolic, and that's exactly what happened with this one. So, you have hold on 1 second. There we go. So, in 3 weeks, I have a 92% move. That's what you call parabolic. So, and for people that ask, the charting system used is TrendSpider, and there is a link in the descriptions for it if you're interested in it. They give you a 7-day free trial, and then on top of that, the affiliate fee that I get every month, I give a portion to St. Jude's Medical Center. So if you're going to use it, please just use that link. Let's see. Let's go to the next one. So here's DMTK. Now, what we were looking at here, before we even get into it, right? Look where we went to today. I mean, this is just classic. Like, this line was there before this day even continued. So, I mean, this just shows you the power of understanding where to draw these lines. So we opened at the low and we just kept going. And it was a really simple thing to see. And I just wanted confirmation because we opened kind of wonky today, right? But look at that. Look how you opened here and then ran right to it. And then once we opened here, we just waited for confirmation for a little bit. And yes, it cost us another $1 because what I wanted to do was I wanted to get above this, at least here, right, before I went. So that got me to 56. So, you know, I'm close to 61, so we're up about $5 on that one right now. I mean, not off to a bad start, up 10% and 8% on the day. But I did like this. Now, here's what else I saw that I noticed. You had a 5-8 crossover, and notice how this 50-day moving average just rode that line, right? Look how it just rode it the whole way, never closing below it except once. Breaks down here, and I think this is when the Bollinger Bands kicked in. Let's see if I'm right. Yep, that's when the Bollinger Bands kicked in, right? You see, break the Bollinger Band, you come back up, and then you should bounce at least to the middle of this Bollinger Band. Hopefully you flip that and then go back to the upper range. And that's really what we're looking for. We're just trying to get in at the right price so that we can't get hurt in case we're wrong. So Lemonade, I got a bunch of messages on this one today from Twitter, and if you don't follow me on Twitter, consider it. We give a lot of actionable, or I give a lot of actionable ideas and commentary during the day. And sometimes I can't even shoot stocks out fast enough via the newsletter. I'm working on that. Let's get rid of these for a minute. So I like this position, right? I really like this because it's very long and steep, right? So you literally look at this. I mean, that's a correction. 50% in 2 weeks. Like that's a correction. And look where you went to. Like you really right back to the beginning of the stock and tested it and bounced. Now, what we need to do here is simple. Let's get rid of this. We need to flip this 111, right? See how you didn't do it today? You can drill down into this. You can see how you didn't do it. And if you want more clarity on it, what you do is you go to a lower time frame, and it'll just show you clearly, right? Bonk, can't get above it. Here's where you broke it. Can't get above it, can't get above it. Look at the end of the day. It's fighting. You have a hammer on the hourly. You think it's finally going to do it. It encapsulates this other hammer and bonk, right? So it's just frustrating. But you need this to break out. You need that to go. And you don't want to play with it until then, because see this bar here? Like if you get through this, you just have so much room to run to this 140. So you really want it to trigger for you. And if you overlay, let's put the indicators in, just the moving averages, you can see that you're getting some serious love here with this 5-8 crossover, this wedge break. And this is really stepping up here, where we've broken this Bollinger Band, we've flipped over this line, we've broken this wedge, and now we're trying to break through another support. So I truly like the action in this. We have 3 more, and then I want to do the indexes really quickly for those that are time constrained. So you can see on Apple, we got way too much going on here. So you can see on Apple how we held the lower trend, broke it, and then everyone thinks it's over, and it's just a sucker to get you out, and then we go. Now you have this wedge here, right? And these lines have been there for a while, right? And you can just see how it's respecting that, okay? And what we have to do is flip this line and then get above it and then start trying to get over these little hurdles. This has a lot of work to do. These larger stocks are like turning, huge boats. And we could base here for a period of time. You can see this base with this being the top of the base, right? And you could actually argue that this is the bottom of the base, which we never even tested. But you could just be in this range. This definitely is not the base because you're not above it. So you can remove that for a moment. But if you just get rid of everything, just leave that, right, in this long-term trend, you could see that you could just be in this 110 to 140 range for a while. And if that's the case, you just trade it. it breaks out here, and you try to get your position off and hope that it runs to the 140 and breaks, and go from there. But understand where your risk is, and then for me, I would be using this trend. If I break long-term trend lines down, for me, I'm out. Like, that's not something I want to be involved with. And you're trying to get a little 5/8 moving average crossover, but I've got the 21 and the 50 that crossed here. I'm pinned right to the 21 today, it looks like, right? And we know from past videos that if we're pinned to the 21, that we're in the middle of the Bollinger Band, right? Which is right where we are. So we need to flip this line to get up. And flipping this line most likely takes us to 130 to test the 130. And by the time you get there, the Bollinger Band and the 50-day will meet it, which will mean it needs more rest. So this is not going to run anytime soon. This has got some work to do. But that could be an interesting entry point for somebody that feels the need that they need to be in it. Let's do Tesla. And let's get rid of these bands. And here you have your little 5/8 moving average crossover. We are above, and we'll get you an exact number, 703.55 is the 20-day or 21-day, which means that you pretty much have an all clear to go to 778, which means that this is setting up. You have this trend here that we held, and this is setting up to move. And again, we can just throw these in real quick, and you'll see how you undercut here, and then how we flipped here, and then from here you just pop up. So I really like this, and I think that you have a good 10%. You have a solid 10% here that you could get, and it's definitely worth taking a look at. So, and then finally, before we get into the indexes, I called this on Twitter today, and that's why I'm saying it might make sense to follow me on Twitter. And there's a link in the descriptions. But this is from before, where we went long, and we're going to get rid of everything and just start over. Just because there's too much going on. So let's get rid of this, all segment lines, and let's get rid of everything. Okay, so this is all you have, price, right? And what I try to explain to people is that they need to understand price before anything else, before wonky indicators and clouds and MACD and stochastics and RSI. Until you understand price movement, all that stuff is gobbledygook, and it's going to really confuse you. So I stress to learn price first. So let's just start drawing some key lines so you understand why they are where they are. Here's 2 points that are connecting. Okay, that's a key. That's a key. You have a huge gap here in between these, right? That's a key. And now look at what that gap does. Okay, put you right here. All right. So what we saw the first time we recommended this recently, we got in it down here for a little bit of that run just on Twitter, but look at this little wedge right here, and I don't know if you can see it or not. We were just showing you a chart that just looked exactly like this, right? We were just looking at that rocket, and I said, hey, you have this triangle going on, and this is what rocket's doing right now. And what happened? It popped out. Once that popped out, there's your trigger. The low of that bar is your stop. I mean, it's really that simple of a trade. Quantify your risk, figure out your position size based upon your risk tolerance, and then move on with your day. And then the trade's on, and now you're in the trade until it works or doesn't work. So see how you trade up, come back down. But we were talking about this on Twitter as how you broke out here, and then you just kept going. So for me today, because I announced that that this looked like it was going to roll, when you broke through, that's going to be awful hard to draw that way, because the trajectory. So let's do it this way so you can see it a little clearer. So from here, okay, you can see this line. When you broke this line, and you can actually see it over here too, right? It's the same exact line. But when you broke this, I actually came out and said, hey, this is going to go down. This is at risk. And that's exactly what happened. You broke this rising wedge. I didn't even use any other indicators. There was really nothing more that you needed to see. But you can see how this acted. We can get rid of these Bollinger Bands. But you can see how this acted. And let's get rid of all the indicators. And based upon that, you just rolled. Now you have an H. I mean, this is really ugly. And now you went into this gap. So the chances are, again, that you could come back down to this 158 level. And that's why I said, hey, if you're in this or if you're looking to short it, this is your place. And, I mean, it's a decent move so far. I mean, up 40 points on it. But that was the reason, that was the rationale behind that. So let's just get to the indexes really quickly, and then we'll wrap up. So on the Qs, we've been talking about this for some time. And what you're seeing happen, you're seeing this 5-8 crossover. We had this MACD that I'm going to show tonight because this is really important. And there's certain times where I will use certain indicators. And for me, the time to use MACD and to use Bollinger Bands is on pullback. So I just want to walk you through something so you can understand it. And we're going to have to leave these indicators in, but we can get rid of this so you can, let's get rid of these just so you can see something. Okay, so, and let's get this vertical line going. Okay, so this is where you're at. Okay, so this is where we're at today. Everyone follow that? So let's just move it over for a minute so that you understand. This is the day before, this is Friday, this is Monday. And this is what's significant. I said that we were having a positive divergence in the MACD. And here was your positive divergence so people can understand this. Okay, see this line here? See how you came down here? See how you came down here and then this one was actually higher with this one? Right? So in other words, what I'm saying is the depth of this MACD was here. The depth of this one was higher. This was higher, that was higher. That makes sense, right? That makes perfect sense. That you would think that the crossover would be less. And if I lose you, please send me comments, and send me comments anyway so that you guys can understand this. Now look at the differentiation between that. Now look at this line. See the slope of this? See how you sloped here? Now, this slope means that this line is lower than this line. Well, that doesn't make a lot of sense because here's where we are in the index. So it's not like we fell out of bed. So this is what you call, when you have situations like this and this, okay, this is a positive divergence of MACD, right? And it's a clear indication that you're going to bounce. And now what happens is, if you know that, you can be aware of it, right? So now you have one piece of the puzzle. Then you see how this red flips to green. Well, when red flips to green, it's a go. Now we're crossing this MACD here. As this consolidates, even if it goes sideways, this MACD crosses over the 0 line, it's a wrap. And this will pick up speed again and run. And that's really what you're looking for. So that's why it was so important for people to understand this MACD convergence. And it's also why I was stating that, I think you're going to see the financials come in and energy come in because this is setting up to take in flow. I mean, demand comes in and that's what moves price, right? It's all about price. And this was the XLF, and I was trying to explain this yesterday. But you can see certain things, right? Like, look at this MACD. See how the MACD here is high? Look how high it is, right? It's right in line with here, but look where we are. Now, this is not a really big telltale sign, but there's a couple other ones that you can just use. For example, this is a clear indication that the XLF has had enough. Remember that indexes more than stocks will revert to the mean. They will revert back. And they follow that kind of pattern a lot closer. So you keep bumping your head against the top of the band and the top of this trend line. It's a matter of time before it gives in and comes back down to here. Now, that's not the biggest move in the world, right? But from here to here is 5%. Okay, if I drop 5%, the Goldman Sachs's and the Bank of America's of the world are going to come in if I drop that far on the financials. So that's what I was pointing out when I said in the newsletter that I think that these things are getting toppy, and you can see this again. You can see this again here, and you can even see the roll here possibly a little bit better, right? So you see this, and then you hit the top of it, and you don't break it, and then you have all these resistances up here. And this is what I was trying to explain to people earlier. And I don't know if I did the best job in the world, and maybe we should go back to a monthly. That might be easier. So this is what I was trying to explain to people. I'm in a major, let's get rid of the Bollinger Band for a second. I'm in a major multi-year downtrend of 7 years. Okay, and you think it's going to break today? Like, you need to understand these lines, especially on indexes. Could today be the day that it breaks? Sure. And then it's going to go to here. So what am I really trading for on this index at this point? That's why it's so important to know your key levels. Now here you have your little bottom, you see this little H, and you have a failed H breakout, which was a great shakeout and gave you plenty of opportunity to get in here. And then November happened, and then we reversed, and that was the end of it. Now, with that said, we look like we're going to push, and we look like we're going to go, we look like we're going to go higher here. Or at least attempt this, right? But what happens? We run into resistance, and then it stops. And then if you're looking at this daily chart, and you don't have that line drawn, you don't understand it. And that's exactly what happened. We bounced off a major multi-year resistance right into an upward trend. And that's why I said that on top of the Bollinger Bands is exactly why I said we're going to revert to the mean, which looks like it could be 5 to 6%. So that's it in a nutshell. If you have any questions, give me a call. An email is the best way, or Twitter, or even YouTube. I'll respond to every comment. And if you could do me a favor and like the video, the purpose of these videos is for me to educate people on what it takes to be truly successful and consistent and profitable in a repeatable process. So the algorithm on YouTube uses the likes to determine what videos they promote and don't promote. So if you could just click the like button, I sure would appreciate it. Thank you very much. Have a great evening.